KiwiSaver investment returns dropped 90% year on year, following an extraordinary 2021. But the Financial Markets Authority says its annual KiwiSaver report for 2022 highlights the scheme's resilience. I'm joined by FMA Director of Investment Management, Paul Gregory. Paul, what is it about this year's report that highlights that resilience, as you guys point out?
So it was a tough year in KiwiSaver for sure, but balances did nevertheless go up overall, and I think that shows the resilience both of members of sticking where they are, although there was some switching activity, but also of the value too of contributions. So their own contributions, government contributions, employer contributions, and that builds some natural structural resilience into KiwiSaver and just shows the benefit of continuing to contribute through markets even when they're not being very helpful.
And we did see a big jump in lump sum contributions this year. What do you think actually drove that?
So it's a little bit difficult to know exactly what's driving it, but I think you would hope that it was a gradual maturing of behaviour for KiwiSaver members that also has shown up in terms of their resilience, and there was some movement towards growth funds, and we would hope that not too much of that is performance chasing, because there was a few surprises, thinking conservative funds with them returning negatively, and some people might not have been expecting that, but of course international bonds didn't do especially well. And we did see some switching, which of course the default changeover was part of that. But again, we would like to think that these are all signs that people are paying more attention, and that their resilience has been improving as well.
Do you think that whole default provider switching process during the year maybe helped with that at all in terms of people thinking about their KiwiSaver, and there was a lot of comms and stuff around that?
It definitely helped, and we saw, and providers told us, those of them who were contacting their members to advise them of that change, that for some of the more disengaged people in defaults, and there is quite a high percentage of them there who are reasonably disengaged and don't really respond too much to communication, that they did for the first time, because this was a case of they just didn't want to move. So yes, I think that was reflected there, as it has been across the KiwiSaver membership base generally.
There was also a sharp increase in withdrawals. What was going on there?
Well, so there was quite a big increase in retirement withdrawals, and so that of course is KiwiSaver functioning as it is substantially designed, which is to facilitate people's retirement.
Fees have been a hot topic for a little while. Average annual fees for active members up slightly this year. I think there was quite a big jump last year, last time we spoke. Overall, fees are more than half of this year's returns. What are you thinking overall about the value of, or where the level of fees are at the moment? Are they too high? Are they about where you'd like them to be?
So we've been talking since 2016 about fees and our sort of expectations that they would slow and reduce over time as a sort of an average per member on a dollar basis. And we have certainly seen that in default, and the default settings change is clearly the driver of that, and we think that's positive, particularly because it's not only about fees and default, there's quite a strong value proposition there as well, and that's the real thing. What's the value that members are getting? And in default, we think the value is strong. And those funds are open as well. They were designed to be open to everybody. So we think that anybody shopping for a balanced risk profile should be including default funds on their menu. Then outside of default, you're right, the increase in fees as dollars was still there, but it was smaller than it has been in previous years. Now, part of that will be because balances overall didn't grow quite as much, but we would like to think that is also part of some of the influence from value for money, because there were some pretty big early moves in response to value for money by the big end of town, who reduced management fees and in some cases removed administration fees altogether, and you can certainly see that showing up. So we would like to think that will continue, that is a trend, that the overall dollars per member for fees will slow down and go backwards. So we'll be looking for that in the ensuing KiwiSaver annual reports, and obviously the other cheering thing about that is that we're not seeing any reduction in services. So people aren't, so providers aren't saying, well, if we're reducing fees here, then we also have to cut services. That we're not seeing that happen.
So do you think KiwiSaver is of a scale and maturity now where we should start to see those numbers start to drop back?
I think it's getting there, and you're also sort of seeing some migration from the larger providers to the more boutique providers. I mean, there's still a very substantial majority of KiwiSaver members who are with the larger providers, but I think that you're certainly seeing the start of that dynamic, and we're keen to see that keep going, provided that there is value for that as well.
Paul, thanks very much for your time.
Thank you, Hamish.